Every trader wants to find the stocks that go 10, 20, 30% in a week or even a couple weeks. The StratAttack universe is something we use in order to find those momentum stocks that will keep going. So I'm going to teach you the StratAttack, and then I'm going to teach you the entry techniques that can be used to get in and create winning positions. And if you're interested in that, stick around. My name is Alex, and this is The Strat. So the first thing you want to understand about the strat, if you're new, is that we must trade back through a previous range. If you're not back through a previous range, we don't know if it's going to keep going. And what this means is we want to look for charts where we make new lows and then reclaim the lows and then go back through the range. So what it may look like is something like this, where price has a range and then we make the new lows, and you'll notice we reclaim these lows here. And then we reverse, coming back through, allowing us to gauge magnitude and say we're going to the other side to stop out anyone that's short in here. So it's very, very simple. And this works both up and down. So you can see the reclaim of these highs to target these lows. So we start the StratAttack on a higher time frame chart, meaning on a monthly, a quarterly, or a yearly chart. For the most part, we're sticking to the month, and we'll also add the weekly stuff in there for the traders at Stat Trading. That being said, what we look for is very simple. We want signals back through a previous range. So those signals may look like a 2-2 reversal. We're going to see we have a 2 down in here, and that's a lower high and a lower low to this bar's range. That's a 2 down, followed by a 2 up, where it makes a new high to this bar and a higher low. That's a reversal, 2 down, 2 up reversal above this. And then we manage our risk on whatever time frame we're trading to the low of the bar we enter on, or you can use the midpoint of this wick. And we let this thing go back through the previous range. We can also look for 2 1-2s. So you can see 2 down, 1, 2 up reversal. So this is our inside bar. And then right above this, that's your 2-1-2 reversal. And these are going to be the 2 most common reversals you will see. The other thing we can do is we can look for continuations. So for example, we can have 3, which is a new high and a new low to this previous bar's range. And we can look at for 3-2 continuations below the lows of this 3. And these are some of the most common things we will be trading on the StratAttack universe. And then the most important part, back through a previous range, where we're taking people out of long or short positions if we're trading up or down. So very important, we start at the big time frames and look for that. So what the StratAttack is trying to do is identify algorithmic trading, buying or selling. And because of this, we need to pick up on that. How do we do it? We do this by looking for 2 directional bars. So 2 up, or 2 down to start the trading week. And what this means is if we have, let's say we have that monthly chart and we have this signal where we have the month signal and then it starts breaking in here. On Monday and Tuesday during the week, we want to look for a 2 up. So the daily chart might look something like this if we have that monthly 2-2 reversal. And let's say here, they buy it Monday, 2 to the upside. It's the first one. Then Tuesday, they come back to buy more. This is what puts it on the StratAttack. So we scan for 2 up, and then we look at those monthly and weekly charts and quarterly charts and say, do we have signals in force? And if we do, we can expect that this is going to keep going the rest of the week, Wednesday, Thursday, and Friday. And the reason this is because if you have a trade desk, let's say you're Goldman Sachs, you may have people that come and say, hey, we did all this analysis. We think we should invest in this stock called Lockheed Martin. We need to buy 100 million shares. So what's that going to look like when they open on Monday and they start buying those shares? Well, they're going to buy it on Monday, right? And then they're going to come back and buy more on Tuesday. So what this tells us is, hey, they got more to buy, right? And since we know they fill these really large positions and that's what causes the market to move, it's aggressive buying or selling, we can pick up on it via the StratAttack. Directional bars to start the Monday and Tuesday trading week. So hopefully that makes sense. Now, as that week goes on, there's a few different ways we can enter these positions. On the daily chart, we have a few entries that we can do. So for example, let's say this is Monday's trading. This is Tuesday's trading. 2 up to start the week. And we got monthly signals. Let's say we're breaking last month's highs here. What we can do is we can look for the gap down buy. So they close trading up in the highs here. And then it gaps down and then starts going again. This is what we call the gap down buy. And we say gap downs are made for buying, gaps up are made for selling because of this reason. where if they're buying Monday and Tuesday, they're really aggressively buying. They want the stock. So when it gaps down, it's actually in a discount. They're like, hey, we can get even more at like $100, even though it's trading 105 yesterday at the close. So we're going to buy even more aggressively, and then it will go flying, right? So this is one of the ways we can do it just on a daily chart. You can also look for gap down buys where maybe it looks like this. They take the previous day's lows, reclaim it, and then take out both sides. This is where you get the outside bar, the low. They reclaim it during the trading. We can buy that, and then we can target the other highs. So 2 ways in on the daily chart. Very simple. The last way, the third way, is looking for momentum. So if Monday and Tuesday, we're just going to get it over here. So if Monday trades up and Tuesday trades up, what will normally form on Wednesday, Thursday, and sometimes on Tuesday is a momentum hammer. So a momentum hammer is where they maybe gap up and then create this hammer signal. This would be on Wednesday's trading. So when we see this, this is another way in on a daily chart. We can just buy it above that high and expect it to go right away, meaning we can have a tight stop either at the bar's open that triggers this right here, or we can do it like the 50% of that wick. Really simple. And then we can expect it to keep going on Thursday, Friday, or Wednesday, Thursday, Friday, if this occurred on Tuesday. So hopefully that makes sense. So momentum hammers we can look for. We can also look for momentum shooters, which are going to be very similar, just in the opposite direction. So 3 ways in just on a daily time frame. The next thing we can look for is actionable signals to confirm the direction after stopping people out on lower time frames. So if we have the TheStratAttack, we know we're going after it. Let's say this is Mondays and Tuesdays trading on a 60-minute chart. I'm just going to draw out some random candles here, just so we have that here. What we can look for is, for example, let's say Wednesday opens and trades lower to start. We can look for the triangle out where they stop guys out and then start reclaiming back through the previous range. Then we can look for the 2-2 reversal to gain an entry. Sometimes you will also have 2-1-2 reversals, or maybe we have the same exact thing, except it goes 2-1, and then we can look for the 2 back to the upside, managing risk to the low of the bar we enter on, or you could use the 50% of the bar that you use to trigger. And then we'd look to target the other side of the range, because this is a broadening formation. We're stopping people out and going back through the previous range. That's what a winning trade looks like. If we do this on the TheStratAttack, we expect it to keep going. So we create winning positions, and then we can put our stops where we had gotten in down at our entry price and let it go until Friday. Because if it's a monthly signal, we got all month. If it's a weekly signal, we get all week. Quarterly signal, we get all quarter. So we want to go for the biggest signals and create winning positions. The next thing I want to do is go and show you the charts to add this all together and show you some real world examples of things we have talked about. So let's get started. The first one I want to show you occurred on AI just this past trading week. So what we'll see is on the month, that's your 2-2 reversal back through previous range. That's what a long position looks like. So we like that. If we go to the week, you'll see on the weekly basis, we have the hammer week. So we want to be trading it this week and this month, is we know if it breaks 2447, we can go after it all month and all week. And then on the daily, how did it show up on the TheStratAttack? Well, you'll see they bought it Monday and Tuesday. We also have the momentum hammer a little bit form on Monday, which we'll talk about towards the end of this video, how we can actually use this when we already know the analysis that we're looking to trade. But you'll see Monday and Tuesday, this puts it on the TheStratAttack. So we scan for these 2 bars, and then we look at the week and month, and we're like, yep, that looks good. The month, yep, that looks good. So come Wednesday, Thursday, Friday, we want to use the entry techniques to gain entry into this stock. One of the ways we can do that is the 4-hour. So if you have a job and you don't have enough time to sit at the charts all day, you can scan and look at the 4-hour on the TheStratAttack list. So on Tuesdays at the close, Tuesday's trading, they closed an inside 4-hour continuation signal. We can buy that right at the open, risking the low of this bar or the midpoint of this bar of the inside bar here, and let that go all week. You'll also see the 2-2 4-hour signal where we stop people out and then keep going in Thursday and Friday's trading. So there's 2 ways in just for people who don't have enough time to sit at the charts. If we then drop to the 60, you'll see the example of the gap down buy that confirms the TheStratAttack. Where you can see we gap down, we stop people out. And then when this goes green on the day, we can go after it right there. In this case, we have a 2-2 reversal signal. So we can manage our risk either to the low of this bar we enter on or the midpoint of this wick that created itself on the hammer. And then we can let that go the rest of the week. And you'll see the same thing happen here. The 2-2 signal which causes us to take out Wednesday's highs. And then it keeps going all the way through Friday because of that algorithmic buying. It's definitely occurring, right? This is what that looks like. Buy, take the offer, and they just keep doing it. So this is awesome. The next example I want to show you is sector specific. So if we go to KWeb, which is the China sector, this is one we put on the TheStratAttack on September 25th. So you're gonna see Tuesday, September 25th, they were two up to start the week. When we go to the monthly chart, what you'll notice is we have a 2-2 reversal month back through previous range. So where are we going? To make the new highs here. So we already know our analysis. It's super simple. Then when we go to the day, we had the gap down buy on Wednesday to buy it. And then Thursday, Friday, they follow through. And then it did not reverse until right in here on Thursday with the 2 to the downside. The first reversal to the downside here. So you can see even just buying the gap down in here, you get 27.75%. If you close it at the open, you get 25%. This is why the TheStratAttack is so good. It's so simple. So that being said, since this is a sector, we can go and look at the sector holdings. And if you look at the TheStratAttack video we put out on September 24th, you're actually going to go and see us talking about all these. One of them was Futu. Still see Futu here. It has the hammer month. It was on the TheStratAttack with the sector. And it's also been a lot higher. So you can see back through previous range on the month, this actually matters, right? It used to be trading at 204. Maybe it keeps going, right? So when we go to the month, we already know that. And we have an initial target to go to 81.86. So when we drop to the week, it's just continuation, but it's confirming that monthly signal for us. When we go to the day, you will see it trades inside in green on Monday. So they did buy it. They just weren't that aggressive. And Tuesday, it goes 2 up again. So it's on the TheStratAttack with all the China stocks in the KWeb sector. Wednesday is the gap down buy. So on the daily chart, you can go and buy this right above 73.63, risking the daily open here. So with a $0.14% or 1.5% of risk, you can go after it. And you'll notice the first reversal on this did not occur until the gap down here at 42% gain with a high of 77%, which is just crazy. So amazing stuff. I want to show you then, if we go to the day here, last one, you'll see the momentum hammer. This is where you can add to your position and buy more. And so you get more entries. There's also the inside day in here, which would have came back in and stopped you out and got you out of the whole position. If we go to the 15-minute, what we'll see is when that gap down buy occurred in here, we had the 2-2 reversal on the 15, which caused us to reclaim all these previous lows in here. So when it reclaims, where's it going? Up here, right? It's that simple pattern of you have a previous range, you get stuck inside of it, and then you reclaim and go back through to take the other side out. So we can take that 15 signal. Ideally, we don't risk all the way down here. That's a lot, right? We'd want to risk maybe the open of the day at the worst. If anything, we want to just risk like 40, 50 cents, something small, because risking $1.47 doesn't make sense. If they're going to buy and take the offer, it should pretty much just go right away. And it did in the morning. This is one of the strongest ones we traded. We also saw Baba do this exact same thing. So if you go to Baba, you'll see Monday and Tuesday, they bought it. And it's on the China stock list. So you already know all the analysis is correct there. We go to the 15. You can see in here, there's the 2215. There was also the reclaim right here at 94.41. So you could have bought it here with the stop here right at the open. The 2215 occurred. At worst, there was, you can see 0.09 and 0.12% of drawdown, which is literally nothing. So you can still be in there with your stop either the daily open or, you know, the 50%, like 40, 50 cents of risk. And then you can let that keep going the rest of the week. And you'll see throughout the week, we have some examples of the triangle day out. So this occurred on Monday the next week. You can see they made the new high, the new low to these previous lows, and then the reclaim in here to go after it again. So this is going to occur over and over. And you can even see in here, the slight lower low, the reclaim, 2-2 reversals in here, the 2-2 reversal in here back through a previous range, and then continuation, and then up they go. So this is happening over and over. It's a matter of finding that winning position and getting in. I want to show you one last thing here on the 4-hour. You're going to see on the 4-hour, the gap down buy just above this low. That's one way in. And then the 3-2-2 reversal 4-hour in here to buy more. And there's also the 2-1-2 in here, which is a gap up, so we could not trade that. But you have the 3-2-2 and the gap down buy in here to gain entries into this. So really, really simple analysis. Now, the last thing I want to tell you is when you have stocks on your list. So if you're doing weekend analysis, you can use the TheStratAttack as a way of understanding how much evidence you have for your trade. So since AI was on the weekend video, we already know we want to see them buy it Monday and Tuesday. So when we go in Monday and they go 2 up, we can just enter the position. And our stop loss can be a reversal against that. So we can buy it in here, 2 up on the day when it takes the previous day's highs out, and put our stop here. And then when they come back Tuesday, slight gap down buy, we can go after that too. And then when it takes us high, we can also go after that, just adding to the winning position. Because now it's on the strat attack. We have a lot of evidence it should keep going. Once it triggers the week, which occurred above this, you can also add it to it there. When it triggers the month above 24.75, we can buy it there as well. When the gap down buy occurs, we already showed how you can buy that, and then it continued. So we can use the evidence to buy small positions Monday, add to positions Tuesday, and let them go the rest of the week. The ones that do not reverse will be the winners. And with the strat, this is the last concept I want to give you guys. The market tells you which stocks are winning. You do not tell the market. You can have the best analysis in the world. It can be perfect. You know exactly what you're looking for. And if it doesn't go up Monday and Tuesday, right? Let's say it goes up Monday, reverses Tuesday, and then they fail to come back Wednesday and buy any of it, and it just keeps going. It's not a winning trade, right? You want to see them go Monday, buy again Tuesday, buy again Wednesday, and just keep doing it. The best winning positions are going to start Monday and Tuesday going up and then follow through the rest of the week. So that's the last thing I have for you guys. If you enjoyed this video, please drop a like. It's a little different than what we've done previously. If there's any other questions you have, feel free to drop them in the comments. I can make a part 2 to this and answer all of those questions for you. And if you're now wondering, how do I get the TheStratAttack, Alex? You can check out app.stratalerts.com. And at app.stratalerts.com, you can simply scan for the daily time frame. And you can scan for things that are 2 up on the day and filter for those. And what's going to show you is it's going to show you the current candle in C2. These will be the same candle when you're scanning at night. And then you'll have C1 as well. So C1 would be Monday's trading. C2 and CC will be Tuesday's trading. So anything that's 2 up, C1 and C2 can be on the TheStratAttack when you scan Tuesday night. So if you go to Alcoa, for example, you'll see it's 2 up. If we're scanning on Tuesday night, here it is. And then we go and check our higher time frames. Say on the month, it's a reversal. It's continuing back through previous range. We could go after that stuff. So very, very simple stuff. If you like the video, again, just like, subscribe, and I'll see you guys in the next.